Hello traders, welcome to the LFB and our global video charting review. This is for February the 1st, 2011, and our review in this video is on the global equity and interest rate markets. Attention should be drawn to the disclaimer on the video page, which we ask you to review and accept before you continue. Global equity and interest rate markets held steady in trade on Tuesday, having absorbed red flag economic releases and headline soundbites regarding civil unrest in Middle Eastern regions ahead of a huge week of news releases to the Reserve Bank of Australia held interest rates steady overnight, while UK nationwide house price numbers came in better than expected, as did UK manufacturing purchase managers index numbers that showed inflationary pressure. Traders will see the US manufacturing numbers on Tuesday ahead of a raft of red flag economics to come this week. Looking at the Japanese Nikkei, Asian equity trade held support and the Nikkei continued the two-day move to hold above the 100-day simple moving average, which is the orange line, at 10,200. A new long signal will form if the Japanese Nikkei breaks above 10,300, which houses the 50-day simple moving average. A break above that then draws in 10,380, which is the 20-day moving average, and then above that 10,450. Oh, sorry. 10,450 is the 20-day simple moving average. 10,380 is the next break above that would signal long for that 20-day moving average to be hit. A break lower, because we do have to look at both sides of these markets, on the daily chart on the Japanese Nikkei that closes below 10,200 on a daily basis will likely draw in a test of 10,000. European futures trade tracked sideways ahead of the German DAX Open and carried enough momentum to allow the cash market to break higher in overnight trade with a gap up from the close at 7,100. German DAX numbers opened up at 71.30 and that break higher formed the first long signal seen in 3 days. A break above this 71.35 has led to targets at 71.80 and then 72.20 just above here. So we are in a long signal on the German DAX, looking now for a break above 71.65 to target 71.80 and then 72.20. Most European equity markets are holding in the positive after 2 sessions of selling pressure that managed to hold above substantial support areas. S&P futures trade, which is the most liquid of all global equity futures contracts, reversed the recent selling and managed to break above the 20-day simple moving average at 1278 in overnight trade. A new long signal has just been formed on S&P futures with a hold above 1285, now drawing in upside targets of 1295 and 1300. There looks to be a substantial area of support in the 1265 price point on the S&P futures contract, and a new short signal will not be confirmed unless a weekly chart can close below 1260. 10-year US Treasury notes continue to track sideways in a very tight channel that's built 6 weeks of cause and effect within a range of 122 upside resistance and 120 support. With Treasury notes moving sideways and the Federal Reserve working hard to hold interest rates lower, it's going to need a weekly chart close above 122.50 or below 118.50 to draw in automated buying or selling algorithms that will break this channel that's been in place for nearly 8 weeks now. This is the 10-year note, so as this goes up, 10-year interest rates will go down and vice versa. So this is the note value. So the Federal Reserve will be looking for the note to be going higher, which will mean that interest rates are holding stable and from their perspective at best going lower. In general, the global equity and interest rate markets have shown that support is in place and that bullish undertones are prevailing in the midst of earning season.